Hey fellow traders,
I found the hidden trading pattern that controls the markets. The only trading pattern that works in the stock markets. Guys, come into the office today and let's go and have a look at this trading edge and system that'll work for you.
you're not going to believe this, but I found the hidden pattern in the stock market that controls the markets. And what is that? Well, it's not in a strategy, it's not in an edge, it's not in a system that you're using. It's all in your head. It's all in the psychology of managing your risk. It's all in the psychology of trading. It's all in your head. In other words, no matter what system you choose to trade in the stock market, no matter what pattern you choose to use to trade, that's not where your success lies. Your success effectively lies in managing your risk in the psychology of how you trade. Now imagine this. Imagine that the only thing that you need in the market is a psychology. So in other words, you don't need any system whatsoever. You don't need a Fibonacci, an MACD, or a moving average crossover system, or anything to that effect. All you need is a system that manages your risk psychologically. So how do you do this? Well, it's really easy. I'm going to show you in this video what you can do and the best system that you can use to make this work for you. Because trading is a 50-50 game, and that's why we use this manage your risk system. 50% of the time you're going to win, and 50% of the time you're going to lose. And you may say, but goodness me, Rob, that's just going to take us to an even zero. But no, if you manage your risk and you make twice as much on your wins as you do on your losses, then you'll be successful. Just remember, guys, 80% of traders lose money. Trading is risky. If you don't like losing money and you don't like risk, rather don't trade. Simple, really. That's how we go. That's how we roll. While you're here, check out my secret blog. There's a free trade in there for you every day. But it's not trading advice, just an idea so that you can go and check out what you're doing against what I'm doing and see if that helps you and see if it makes you a little bit better at your trading and your success. While you're there, pick up your free Forex book. It's completely free. It's in the index. It's on the side. It might even be in the description here. Totally free. It's for you. Enjoy it. Have a good one. So without further ado, I tell you what, let's get to the trading system. Let's see if this trading system will work for your trading. And if your psychology can understand that the best loser wins, then you're on the right path to success. Check this out, guys.
So what trading pattern are we going to use to trade the stock markets? Well, if you know me by now, it's going to be pretty simple. It's going to be support and resistance, and it's going to be supply and demand. Simple as that. And some trend lines, of course. Trend lines are always good. Let's move it to the day chart so that we can draw something in here, and let's make it a line chart, and let's make it so that we can see the damn chart so we can draw some lines on it. What are we going to do? Let's draw in our main area of support for the day, well, for the week, whatever the case. There's our main area of support. Then let's draw in our main area of resistance. There we go. Main area of resistance, and it's actually in there at the moment. Look at that. It's actually in the main area of resistance. Now, what we're going to do, we're going to take it back to the candle chart. This is the day chart, and this is your US 500. Oh, just look now, it's a US 500. It's been going up, going up, going up. What a move this market has made. It's been really great. Now I'm just going to take it back to, say, the 4-hour chart, make it more tradable, of course. It's quite easy. We'll just make it more tradable. And let's see where we are. So as this chart shows you, there's your main resistance and there's your main support. Now, you would think now that you're in your main resistance, so you're just going to go short, or you're in your main support, so you're just going to go long from these major areas. But what you use your major support area and your major resistance area for is to determine where you are effectively in the market. Because as you can see, every time it reaches a major resistance, it's going to bounce around and come out. And every time it reaches the major support, it's going to bounce around and come out, most likely. So that's your odds on. But what do you do now? Now you're on the lower time frame. You start looking for areas that might give you a good trade. Now at this point, I probably wouldn't just go short, because this could break out of your resistance area and go long and make this into a support, because things are so strong in the markets at the moment. But if it was to come back and you take a short here, you're not going to get much out of it. So what you actually want to do, you want to look for this demand area down here where there's some money waiting. There is some money waiting in this area, and then look for a trade into that area. So if it comes out and goes into there, take a long trade out out of that area and let it go up into your resistance area again. While it's in the resistance area, you need to figure out for yourself with whatever methods you can if it's going to break out of the resistance area or if it's going to stay in there and come back and drop down again. Most likely for quite a while it's going to stay in this area, it's going to drop out and come down again. So what you're looking for is maybe a long trade there.
Many of us enjoy a glass of vino or a cocktail every now and then, and I'm one of them. However, recent studies show a big indicator we may be drinking too much is excess lower belly fat, also referred to as liver belly. This is because the fat burning process depends on a healthy liver. And although alcohol can be quite damaging to the liver, the ancient Mediterranean ritual at the link below helps naturally protect, purify, and cleanse the liver of every form of alcohol, allowing us to enjoy a few drinks while supporting healthy weight loss at the same time.
But if it breaks through this area and comes down and keeps on going down and going short, then you look for the next demand area, which is down there. There's another one right there. How do I pick up these demand areas? Look at this. 1, 2, 3, 4, 5. All these green bars after that little red bar means there's money lying here, guys. That's a demand area. Look here. 1, 2, 3 big green bars there, plus a fourth, fifth. There's a demand area there. There's money lying there, and it hasn't come back to pick it up. So it's going to come back and pick this money up and then go. So you can take a good long trade there. You could take a good long trade there if it broke through. If it breaks through that one again, there's another one waiting over here. All these areas where you can pick up trades where it's going up. The other thing you can look at, guys, take a trend line, draw a trend line along here and see for yourself where the trends are. If there's any trends at all. There isn't really. It's not really that great. So leave that out. But if there is a nice trend, going up here and you can pick up a few of the prices and closing prices and whatnot, you can put a trend line in and you can work off the trend line as well. In this case, you're not going to work off the trend line. In this case, you're going to work off these demand levels where the money is waiting for you to come back and take it. So in other words, I wouldn't take the short here out of this big resistance because it's just filtering around here. It's actually messing about doing nothing. Not to mention that's your main resistance point. Yes, it might go short out of here and keep going back down to the support, but it could also break through it. But what I'm looking for is for it to come into this, to continue on with its strength and come into this demand area and go back up. But it'll only do that if you get a green bar going out of it. Guys, you've always got to watch out for this. If you go back on the trades, where would you have taken this short trade? You would have taken it on the red bar coming out of there. Where would you have taken this long trade? You would have taken it on the green trade closing outside of the support. That's your long trade. Over here as well, green trade, green bar closing outside of the support here as well. On the demand, if it comes back into here, where would you take it? On a green bar coming out of here. So it's as simple as that. Look for the green bars that are closing outside of these areas and then you take it. So if it comes back into here and comes nosing down into this area, don't just take the trade. Wait until you've got a clear green bar coming out of here, then take the trade. See here, when would you have taken this trade? When the green bar closed outside of the support, you would have taken it long, and look how much long you would have got all the way up here. You might have got out of the trade somewhere around here, but you could have got back in on numerous occasions in demand areas while it was on its way up as well. On its way down, same scenario. You could have got out in all the supply areas, same sort of thing. You're looking for the red bar coming out of the resistance, then you take the short. You can also wait for it to go down, then go back up, and then take the short, because it normally goes back to test the area. Don't forget, it normally goes back to test the area or to pick up the money. Like in this case, where there's a demand lying here, what's going to happen? It's going to come back to pick up this money. It's not just going to go straight up. Nothing goes in straight lines, guys. It's going to come back to this area, pick up this money, and then go. So wait for this. Be patient. Don't be impatient. Impatience costs you money. That's a simple trading system for today. So hopefully this one will also keep you going and keep you in mind. Manage your risk, guys. Your risk is important. 2 to 1. Where would you put your stop losses? Stop losses just below the levels. Just below the levels. So if you take a trade here, put your stop loss just below the last low there, and then you'll be safe and take your profit somewhere up there. Okay. Okay, there we go.
So that's the simple trading system that I use daily, and I've been using it for many years. Guys, I've been in this game for 30 years. Nothing changes. It always stays the same. The risk stays the same. The only difference is back then we didn't have all the fancy technology that we've got now, whereas now we have all these fancy systems. But it's basic price action. It's basic understanding where the markets are going, what's going forward, what's going back, what's going up, what's going down, and why that's happening. Really simple. You can use this system in any sort of system that you use where there's support and resistance available. For example, if you're using trend lines, if you're using support and resistance, if you're using supply and demand, if you're using Fibonacci, you can use this system. The moving average crossovers, the MACDs, the RSIs, all those type of indicators are very much lagging indicators. In other words, when you take the trade, you're taking the trade too late, or if you sell the trade, you're selling the trade too late. Whereas with price action trading, you're hitting the thing on the nose. You're sort of getting the trade in at the right time. Thanks for watching the video, guys. Till next time, cheers, and don't forget to watch the last video. Bye.